following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have? Well, the dollar index not moving much, $100.70, up 7 cents. A little bit more interesting is the reaction to the EIA numbers this morning, off 21 cents on West Texas crude at 53.19. The metal market flat, up 0.1% on gold to 1275.80. Silver up about the same, 1828. Platinum off 0.3% at 965.90. And Dr. Copper, the worst of the bunch, saw some pithy comments earlier in the Tiger's Den about how copper and other base metals kind of doing the nasty dance lower. But we will persevere. And of course, when it comes to the S&P cash, we were off down to 2341 on the S&P cash. Now we're up, 8 points, now just off a little bit less than 6 points at 43.48. Again, we're going to have lighter volume over the next 2 days. In fact, I suspect volume into the next hour is going to start tailing off and probably be 3/4 of what we had today, tomorrow. Maybe if we're lucky, 3/4, maybe a half. Looks like a lot of waiting and prognosticating about what earnings are going to be. Talked about a few of the stocks going into earnings next week. It's going to be a week from tomorrow where we really start seeing at least the first wave of earnings, especially in the financials, come in. And that's probably going to dictate a great deal more about what happens in the market. Now, do we know what those earnings are going to be? No. And for the most part, at least the initial reactions are going to be a lot about what the CEOs and CFOs say that they mean. They can be over-optimistic or pessimistic, and those are comments probably during those earning calls are going to be much more important than they've been in previous sectors, probably because a lot of people are going to say, well, it depends on what happens with the tax bill on what the last half of this year is going to be. So, again, after we get done with those, if there's no big things, it's going to be a lot of hurry up and wait this year, especially in financials, other things, the big tech stocks on whether or not they can repatriate that money. A lot of people want a lot of those things. And, of course, it's a lot of people's goal to slow things down in Washington and make sure that, at CNN, you don't want anything good to happen. You're committed to being the communist news network. Your whole thing is just how bad can we get it? Can we start a war with Russia? Man, I watched them this morning, and I don't know. I think at the height of the Cold War, Pravda was probably nicer and thought more about the United States than, what I see here lately. But I don't know. It's just beyond me that you'd want your country to be in such a state. But what else can you say? It's just, I can't watch it anymore. It's just just like someone wanting their home team to fail. Anyway, right now we've got the Secretary of State and Russian ambassador talking on TV, question and answer session. And I think after they came out and the worst fears of everybody talking up nuclear war between Russia and us, they came out, put on some smiley faces, and the market seems to have been improving since then. But what else can you say? As I said, we're off 5 or 6 points in the S&P cash. Volume's going to be lighter today, although we did have a push, and volume to this point compared to yesterday just a tad ahead of what we've seen. I actually had bought a lot in the energy sector. We cleaned those positions up. We'll be talking about what we did and why we cleaned those energy positions up today. Had one that we were down a little on, a couple of them that we made or broke even on, and a couple that we made some good money, 10 or 20% on, all based on the idea that we saw a move in crude coming. That was crude get down a little less than $48, got into the mid to high 53s today. And going into a long weekend, it just didn't look like there was a lot of juice left. We'll talk about a couple of those positions. We'll look at the charts and see why I bought them and how they kind of played out today. So this is kind of the post-facto, post-mortem, except that I guess the trades are not really dead. We just took our cash. So we'll talk a little bit more about that. As always, we'd like to talk about history.
That it's all just a little bit of history repeating.
It is history repeating, and as bad as everybody wants to make it on cable television, it's been a ton worse. I can't believe. I guess if you have to sell 24 hours of cable news, then everything has to be the end of the world coming. But it was truly bad. This day in 1871, the bloodiest 4 years of American history, begin this day with Confederate shore batteries under General Beauregard opening fire on the Union-held Fort Sumter in South Carolina's Charleston Bay. During the next 34 hours, 50 Confederate guns and mortars launched more than 4,000 rounds at the poorly supplied fort. On April 13th, U.S. Major Robert Anderson surrendered the fort. 2 days later, the U.S. President Abraham Lincoln issued a proclamation calling for 75,000 volunteer soldiers to quell the Southern insurrection. And, of course, starting the biggest loss of life for U.S. forces, the war against North and South, and the poorly named war between the North and South. It was how could it be the Civil War? It seemed to me such an uncivil war, and pretty horrible things done on both sides in the fight. But, if we really want to know what bad is in our country, this was a bad day. 1861 starts the Civil War. We'll be back after this. We'll put a smile face on. We'll look at some good trades. And then we'll look at the rest of the market as we go into what should be a quiet Thursday and the ramp to earnings next week.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And today, Windows Vista is no more. Let it rest in peace. Microsoft is bidding farewell to Windows Vista more than 10 years after it first debuted. Support for Windows Vista ends today, meaning users will have to move to a more recent version of Windows if they want to remain secure. It's the end of an era for an operating system that arrived late to the market with its widespread criticisms. It worked pretty good for me. It had some bugs. It affected those bugs tended to affect a lot of people more than it did me ever. It seemed to work fairly good, but you know what? I seem to do fairly well with computer stuff. And I mostly because I back up regularly and I install my updates after I've backed up my machine in case anything goes wrong. Most people just, maybe I'll change my oil in my car this year. Maybe I'm not. Back up your machines, folks. Especially if you're a trader, it is the tool that you use. But on this day, Windows, hasta la vista. See what I did there? You didn't think today would be the kind of show it would be, did you? Let's go on to some other stocks. We got Rex Tillerson. Man, he's an impressive dude, isn't he? He looks the part going toe to toe here when I'm looking at the side view. We were going to talk about some of the trades. We got out this morning right around the EIA numbers of some of our trades. Wanted to look and say and show you what I'd been looking at back here in some of them. One of the trades we got out of here today, and it was just we could have gotten out, a few days ago, but I thought maybe we were getting and setting up for maybe a little bit more. Got out a little bit about 14. We got in just a hair over $12. But there was a nice big sign of strength and gap that goes back to the 30th of November. That thing went up on 34.2 million shares. We got back into that right around this level at 12, the actual low at 12.95. But we had about 6 million shares going into that sign of strength at about 34 million shares. Pretty good chance you're going to have a nice big move. Didn't like the way that crude responded to the EIA numbers this morning, so we got out. But, $2 on a $12 stock, pretty good trade out here. There wasn't much in the way of these stocks, of any other sector looking a little stronger. Was actually expecting a little bit more out of these. I suspect now that what we're going to see is a retrace in crude, maybe 51.75, maybe $52, something in crude, and that will set up the next AB in a lot of these sectors. But very, very good looking charts in a great deal of these. What else did we do out here? Sold Apache this morning. We bought that one at $51 and better. This thing kind of bounced around a little bit after we bought it. But, the spike today, pretty much back into this first gap, needed to have some juice. This downside on the 23rd of February needed 11.7 million shares. Today, pretty indicative that we weren't going to get that kind of volume. You're going into the weekend. The volume's going to be kind of weak. So we sold that out here. It was above $54 when we sold it. But you were going up against that gap with heavy volume, 11.7 million shares. Today, you should have gotten some decent volume. You didn't. So, you make $3 on this thing. It's not bad. $3 on a $50 stock, especially when the market going sideways for the most part. Not a bad deal. We sold Uranium Resources. That was and still is a fairly good-looking pattern out here. We bought this thing at a little $1.80. Got out a little over $2 this morning. This one had been making a kind of a very nice pattern that I like, which is this just going sideways business. And that started on the 24th of March and just kind of continued on. Had some nice bounces. Got to 218 yesterday. Opened up fairly decently today, but you could see it was fairly weak. Who went ahead and sold that? Now, 20 cents off $1.80. Again, in a market that's not moving very well, this is kind of the best looking sector out there. And I don't know if there's anything else to talk about. We had some that we got out flat. It's no big deal on those. Again, in a market that's not trending very far, pretty tough to figure out what you want to be doing and where you want to go. But at least making a little bit of money in a overwhelming sideways market for most things. Got some questions. You can email me at path@tfnn.com if you like. Okay. TLT short this morning, and that is from Seattle. RJP from Seattle. What do you think about TLT? I just went short this morning. I would have liked to seen a little less energy off this. I think there are probably some better shorts out here now. Is this actually bad? No, it's just I don't see the kind of risk reward in this that I see in some other ones if you truly wanted to be short or bearish on something. You had 10 million shares back on January 12th at 123.14. We didn't quite get in there today, but 8 million shares so far. Is that what it is? You're probably going to get fairly close to that. I would probably, if you're okay, I'd probably just take the trade off and take a look at what happens next week. I don't see a lot of risk reward going into a 3-day weekend and placing a trade here. Although we'll look at some of the charts I had out here this morning and some of the things that I'm looking at. To me, Alibaba, probably a little bit better. What else? Windows 10, much better. Okay. What do we have? Alibaba. September 28th, 109.87, 23 million shares. What did we have a couple of days ago? 14.7, let's call it 15 million shares. Now it's broken the previous high, and now it's just kind of gone sideways. One of the things I like to do is kind of look from the top to the bottom, the kind of energy that came in. Now, to me, Alibaba had run from September 28th at 109.87 down to the low at $86.01. Now it's gone up. Now, with a couple of days exception, especially this one-day sign of strength back on the 24th of January, that's all that's really been pushing this thing up. Not a lot of energy. We've now broken the previous high. You've done so on, what is that, 40% less volume. To me, maybe Alibaba looks like a better target for pulling a short here, but I don't see a signal yet to do so. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we got a comment in the den that says, that was not a positive news conference and the market rallied. I think that they basically had, or at least the media was turning this thing into that by the end of it, we were going to be, that Tillerson and the Russian guy were going to be, having Glocks out at 20 paces shooting each other, that they, didn't say anything horrible was probably a positive. But I don't know. Media right now is looking for anything. It's become almost clickbait. Let me put it that way. So I think anytime that nothing horrible happens, since everybody's predicting the end of the world, you should probably expect a bounce. I just don't see either the markets or everything being that horrible. But everywhere I look, people are, claiming the end of the world is nigh. I don't think it is. I think next week is going to tell us a lot more, and it's all going to be about earnings. I think a lot of the political stuff will fall by the wayside. CLS, some of the other ones. Oh, forgot to look at that one. Just had it up here. Let's bring it back here. HPQ, we found out that computer sales are actually up. I was told that the PC was dead. How many times do we hear that kind of stuff from the talking heads on TV? Peak oil. I had to listen to 3 years of that rot. Well, the death of the PC has been greatly exaggerated. Hewlett-Packard coming out with some numbers saying that sales actually are picking up and briskly on a day that we are down. This did gap up to 1837, and so whether or not it's going to hold this breakout is anyone's guess. I'm, of course, neither long or short. But it may tell you about something that's actually going on. And computer sales have become seasonal, so that if we get into late July and these numbers tend to hold, look for a lot of people going back to high school and college, buying some PCs again, and having another good, August, September timeframe for computer sales. I'm not expecting HP to go back to the moon, but at least today, computer sales are good. Let's take a look at some other ones out here. All those surrogates. Clickbait. The clickbait cable television network. Celestica. We talked about this one for a while, that it had not been able to get any kind of juice above. Looks like it's getting back into the trading range. This on the 27th of January, 2.7 million shares, and kind of got over it here in the last few days up to 1474 for CLS. But again, 340,000 shares, 500,000 shares. Just most of the stocks I've been looking at, either at lows with lighter volume or at highs or lighter volume, and that kind of denotes a bigger trading range in this market. Don't know much about this one. Equity Commonwealth, EQC. This one's breaking above the previous high. Don't think it's going to see the kind of volume you want. September 8th, $31.90 with 1.7 million shares. Yesterday, 240,000 shares. Today, yesterday, 390,000 shares. Today, 240,000 shares so far. So it doesn't look to me like we're breaking any highs out there. GFI, wanted to see how this did with gold pushing very highs. Listen to Larry Pesavento earlier today saying that we'd run into resistance on some of the things that he looks at. I just kind of look at the lack of people wanting to go headlong into this weekend, either oil or gold. Although I think gold's holding up a little bit better today. I keep on looking at a handful of these charts like Harmony and Goldfields, where you do have highs with a lighter volume. The February 8th high, $3.74, 13 million shares in GFI. You hit that with 6 million shares, and man, do I hate when you hit, especially in these gold stocks, highs with half the volume. Energy back off the low from March 10th was significantly lighter than the energy down from February 8th. Can all this change on a dime? It certainly can. If we get another 9/11 or the North Koreans launching a nuclear missile, does it all change everything? It does. I wouldn't be short any of these. nor would I be short the any of the gold triple sized ones out there, because we are in a volatile geopolitical climate. But what's this telling me is there just aren't a lot of people pushing into the entrances to get to this one. I wanted to look at Harmony, what is it, HMY, right? HMY. Harmony. Wanted to see how this one came up. It has not gotten back up to its previous high. You had your high on February 16th at 299. You kind of got up to 278 yesterday. This one actually kind of pulling back. To me, again, no signals yet, but you'd think that going into a 3-day weekend, someone's going to either want to pile into crude or into gold. And I think tomorrow, by the close, is going to tell you a lot more of which of these two is the preferred fear vehicle going into a 3-day weekend. We'll also tell you something about what traders think. PRXL, nothing in that one. RDUS, Radius Health. Some of these things starting to make some nice lows, like the way that Radius Health, RDUS, is bouncing around this high $35 range. November 3rd, $35.92, 2 million shares. Tried to get into it, got into the candle, but could not do it with less than half the volume. On January 3rd, you get an automatic rally. It gets up a little bit more than 50% to the February 15th high, kind of back down. A little bit more juice than you would think. One of the reasons why I didn't pull the trigger. And, of course, on the 21st, you had 1 million shares, which is more than the previous low at 700,000 shares. So you want to wait one more time. You get another low out here at 729,000 shares on April 6th. But this range is looking very interesting out here. Today, just 200,000 shares. When we come back, this may need a little bit more consolidation because of the energy off that February 15th high. But there are a lot of stocks out here that look like they're just run out of steam for selling. That may be one of them. SNA. Okay. Please review what VMW has in it these days in the Dell connection. Thanks. Okay. Let's take a quick look at the chart. VMW. What these guys do, VMware. Well, we'll talk about this when we come back. VMware makes virtual connected routers. We'll talk about what that is and why it's done a little bit better here over the last 3 or 4 months.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual price pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Got a lot of stuff to look at here today, so we'll continue and soldier on. What do we have going on out here? A couple of different things people are talking about in the den, but let's get to VMware. VMware, of course, it's got into the $90 range. I suspect it's going to go to $100, although you may get a little bit of a pullback. To me, the only risk reward would be buying this thing at $85, which would be a gift because I think it's going to $100. This was a stock that I really loved what they did. Actually, the company, must not confuse the stock and the company. I liked what the company did. They made virtual routers, i.e. you just plugged in a bunch of cables in the back, and instead of having to plug a cable in a certain port, if you wanted to change what was going on and where the bits were put around on the internet, you just told it, and it would reroute the bits without moving any cables. If you wanted to change an IP address, all you did was type it in. Kind of standard now on some of the bigger stuff, but they were the real pioneers of getting this stuff done way before Cisco in virtual routers, and still pretty much the leader. The stock's done extremely well. I never got the pullback back at 65 to buy it, so I had to let the thing run. But great, huge sign of strength back there with no pullback. And I got to wait for a pullback to get the risk reward correct. But that launched this thing up. My guess is if you're lucky, this thing pulls back to $85. You buy it for the ride to 100. But my guess is probably 70% chance this thing just kind of meanders to 100, even a bad market. It's just once you get to 90, you're probably going to hit 100 in the stock market. And one of the worst things you can do is short a stock that's in the $90 price range. But very interesting technology. Certainly, I think all routers will be basically built this way one day, even the cheapest ones you have in your house. But at the moment, really kind of at the high end of data farms and stuff like that, where people, especially Amazon Web Services, Google Web Services, they've done an incredibly good job at getting these things in there. And that's where these things shine, especially when computers have to be brought on and brought out of service instantly. Makes it you just hit a button and suddenly everything is rewired. Someone's not back in there with patch cables trying to get everything right, messing it up. Just makes life easy. Kind of the difference between when there used to be an operator that would literally plug things in and out like you see in old movies. compared to when everybody just went to touch tone and your phone call just went through. All the wires were just automatically hooked up. Kind of the exact same thing. Kind of weird that we let computer routers go for so long with the model from 1940s telephone business instead of the 1980s touch tone model. But if I got down to $85, I think I'd be all over this and wouldn't be shorting it. But my guess is it's probably already moved. Probably will go to 100 and not give me an opportunity to go chase it down. Some discussions about chasing Snap for a short squeeze. I said, man, everybody's just piling onto this thing short, and it's got to have probably pretty close to a 50% short ratio. And of course, we were debating whether or not this thing would do a GoPro, i.e., go from 30 or 40 bucks to 100 just on a massive short squeeze. This thing still has the possibility of doing that. And if the market probably looked a little bit better in the tech sector, I probably would. Now, shorters are still piling in on this thing. Depending on in the last week, we've had as much as 29% of all share trades start with a short position or a short trade, and the worst day has been 23%. So shorts are still very, very active in this. And again, when you want to look at a stock that's gone up on pretty much nothing but a short squeeze, you can look at Tesla too. None of the news has gotten any better. The financials have gotten worse, and it still goes higher. And this Tesla continues to remind me so much of iOmega. I know a lot of traders weren't around in the mid-90s, but a great model. And if you can find stuff on the web and read about it in the iOmega move, I think it would be well worth your time to learn how this stuff plays out. iOmega made removable hard drives that had like 100 megabytes on them when you might buy a hard drive, and that, if it had 100 megabytes on it, that was amazing. And of course, everybody was dying to get any kind of level of storage. The cartridges weren't particularly fast, but if you had a lot of data, pretty interesting deal. They had really taken, iOmega had really taken off because the government wanted everybody to pull their hard drives out and put them in a safe at night, especially in places like the Pentagon, other places. They were starting to use these in or technology like it, or very close to it, in the F-16s during the Gulf War. You just pull this hard drive, plug it into the F-16, all your maps and waypoints and everything were there. So there was a lot of push for that technology, but it kind of got overran fairly quickly in just about a year or two. But the people behind iOmega would scream at the people on CNBC and yell and write horrible things to them if they even implied that iOmega wasn't going to $1 billion per share. And occasionally on CNBC, they'll talk about those days. Joe Kernan, who would bring up, there's probably some weaknesses in this business plan. He'd get creamed for it. What I don't hear is a lot of discussion about how Tesla is going to the moon. I see some ridiculous numbers quoted in the press for how many cars they've sold. I don't think that they are anywhere close to selling that many of these next version cars. I think a lot of people like the idea of it in theory. In practice, when they go to plop the money down, I don't think sales are going to be anywhere close to what everybody says that they will be. But Mr. Musk is one thing, and that is about selling the sizzle, not the steak, and trying to keep the stock price up. Somebody tried to compare this against Amazon, and I don't see how the parallels continue, i.e., are you going to wait for 10 years till this stock, or maybe 15 years, till the stock is truly worth $300? Now, I think you had the opportunity to buy Amazon at $6 or $7 or $10 or something. If this came back to $10, I'd be gladly taking a look at it. It's just, and has been for the last few years, using any kind of standard metrics, a $40 stock. But you got to embrace the bubble. And that's what is Tesla telling me, that we do have a bubble in some tech stocks. People not really thinking about how much it's going to cost to build all these factories. What's going to happen with those profit margins that are 25% go back to under 10? There's a lot of stuff going on out there. We'll talk about this and more.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're coming back for the last segment here today. I will not be here tomorrow, starting an extended vacation. I'll be back on Monday. But guess what? Since I won't be here tomorrow, that does not mean that you should forget about Tiger Dollars. Yes, your time is running out. But if you wanted to make the best money you made this year, a instant 50% bonus, go to the front page of TFNN and check out my newsletters, both the Tech Insider, the Path of Least Resistance, and the Art of Timing the Trade charts. We'll be doing some promotions with those in the very near future. So make sure and sign up for those Tiger Dollars now. You're going to want to use them very soon. And, of course, you'll rue the day that you didn't buy those this weekend. And you know what? If you put it off even a day, you probably put it off until next week, and it will all be over. So just do it today. Just think about it when you sit down. The first time you sit in the easy chair, know that you need to get up and do it now. You'll hear my voice haunting you for an eternity if you do not. Anyway, we're talking about Tesla. And again, I had a question on whether or not you could look at this as a 3-gap play, and you could as a smaller time frame. That would take you back to about $270. Why I wouldn't have taken this one is that yesterday that 30% of the trades started as a short position. Again, if you're going to make a lot of money on shorts, the higher the short interest. Could you be right? You can, but overwhelmingly what will happen is that you'll get squeezed out, or what's even worse, you're right, and every dollar down there's somebody willing to cover it, slowing this thing to a snail's crawl as it pulls back. Normally the best ones, like my biotech short of a year and a half ago, where the literally fell down a third, was that you get these highs and you don't get a lot of shorting. And then, of course, without a lot of people to cover shorts, what you normally get is the thing come down, and then people start shorting it then, making it even worse for those longs. And they start to sell, and you get a real kind of cascading effect. You get that kind of just a cascade, probably the best way to say it, or what's it when snow falls down? I'm just not thinking of that word right now. You get the whole thing. Avalanche. That's what it is. Avalanche. Yeah, maybe Chanos got squeezed out. He's been right more than wrong, though. But again, I don't want to be in a stock that's that short, even if it goes down. It's just painful, and it doesn't make a lot of sense, and it wears you out. If this would go back up to 313, nobody shorts it up there. That one would be a lot more tempting for me than that. Same thing with shorts like Snap. I just don't understand piling on a thing that's 30 or 40% short out there. And again, conditions correct, market starts heading up. You might find me long even a dog Snap just for the quick and vicious ride higher when shorts cover. So maybe that's a good thing. Anyway, as I said before, I will be gone tomorrow, starting a vacation a little bit earlier. Newsletters will come out as usual for my subscribers. Everything will be okay. In the meantime, you can, not when you have to. And we'll see you here Monday. Same bat channel, same bat time. And remember, Tiger Dollars, Tiger Dollars, Tiger Dollars. And the front page of TFNN. To sign up, get my newsletter, get both my newsletters, and The Art of Timing the Trade Charts. We'll see you then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.